Reality is that there's this thing called risk reward. If you don't understand risk, you will just kill yourself. I would say a lot of companies fail. I compete against everyone, and everyone competes against me. We are quicker than the bank, but we are cheaper than alternative lenders. The quicker you get all the things done, the more you have time to think about things that are important.
In today's episode, I have Gustas, a founder from Lithuania that has a company that specializes in rental properties, providing an investment platform. We're talking about how to raise money, where does his business raise money, how they scale, how they think about risk, advice for newer entrepreneurs, or advice Gustas would give himself if he started the business from scratch and wanted to make it successfully. That's what we're covering in today's episode. So stay sharp, enjoy this episode, grab some popcorn, and enjoy this episode. So, Gustas, nice to have you today on the show.
Hi, thank you for having me here.
And I think you're from Vilnius, so I want to ask, what does the company InRento.com, what do they do? What does the business do?
So we enable investors and project owners to transform cities one project at a time. So in simple terms, we enable investors to invest in real estate-backed loans and earn passive income.
Okay. How big is the business, by the way? How much revenue last year?
So last year we did a little bit around 1.2 million, and this year we are targeting 2.5.
Okay. How many employees, by the way?
Around 10.
Is the business profitable?
Yes.
Very good. Very good. So when did you start the business?
So we started in 2020. So we basically noticed that barely anyone was touching this subprime buy-to-let sector of financing in terms of crowdfunding around Europe, and I decided to start. So we started in the middle of COVID, so wasn't the best moment to start for this cash flow property investment, but the rest is history, and now we're here. So
let's go. And how does the business make money? So what's the business model like? How is that working? I'm maybe not so familiar with these kind of projects or businesses.
Yeah, so we operate exactly as let's say, any other credit institution. So let's say a bank. So we make money from commissions, from financing, but the interest is being earned by the investors. So we work as an intermediary, and this way we make money from commissions of structuring the deal.
So you don't make money if the property is cash flowing a lot of money. So the investors basically have all of that upfront, all of that upside.
The investors are in interest. So we basically think of it, let's take an example. There's a bank, right? You're a real estate developer and you go to a bank to apply for a real estate, a business loan for real estate. So in that case, bank takes money from the treasury and lends you the money. In our case, we apply basically all the same processes up till the end where the money comes from. From that point, we crowdfund this money. So basically, the investors choose a specific project they want to invest. And in simple terms, people are enabled to act like a bank. So basically, lend their money.
Okay, got it. What is the hardest part in this business? Because I think the hardest part is actually having the good property, right? Or what is the hardest part of this business?
Yes. The hardest part in this business is acquiring good deals. So deal sourcing. This is the hardest part. This is where I would say a lot of companies fail. So basically, let's see what sets us apart. So we currently, our outstanding portfolio is around 40 million euros. Total funded is over 55 million euros, and we have experienced zero defaults since inception of the company. So, the projects that we financed, they pay interest on monthly basis. So this is quite an exceptional result, considering the size of portfolio and considering the fact that we already operate in six markets.
And how do you source them? Like, what do you look for properties or these kind of opportunities? You look for off the market opportunities, or how do you go about it to find these properties?
So we don't look for properties, we look for borrowers. We look for people who specialize in this. We facilitate finance, we facilitate debt. So basically we work with experienced project owners who mainly operate in two verticals. So cash flow properties, so anything, let's say hotels, Airbnb portfolios, etc., and conversion projects. So basically when you have, let's say, unkept building, or let's say a previously commercial premises that are being converted into lofts or modern apartments, these are the two verticals we specialize. So the way how we go about it is quite straightforward. We just contact them. That's it. Direct sales. There's not so much secret. Like if you, I think that what most, let's say, what a lot of finance and fintech companies don't get right about this, about fintech industry in general. In order to be profitable and in order to scale, you need to be very disciplined and you need to understand your niche. Because if you're going to be, let's say, an alternative to a bank, like very, very big statement which says nothing. We are an alternative to a bank. But if you begin competing to a bank, you're going to lose this game. It's impossible to compete with a bank. So you choose your vertical and you must understand, how can I be more competitive than bank in this particular vertical? We chose these two verticals. So we acquire customers with direct sales. When you look at, let's say, Lithuania, there isn't much clients in terms of B2B sector for our vertical. Maybe there's 100 clients. We're already in Lithuania working with maybe 30 of them. So, and probably we have already spoken with the remaining 70. So, this business it shouldn't be, let's say, consider anything, let's say the approach and the way how this business is done, it isn't much different to, let's say, banking. It's all based on reputation. We have exceptional reputation when it comes to the investor side, because we had zero defaults and generally we have had this significant sized portfolio which pays monthly interest and has been paying on time. But the same goes for real estate developers. The same goes for property owners. You may think, so what is this reputation could be about? So like money is money. Anyone can offer money, right? Well, the deeper you go, there's more details. So let's say what sets us apart, and another niche, let's say what basically only very few players on the market can do, and one of us is auctions financing. So let's say you're a real estate developer, you want a state auction to acquire an asset. So congrats, you got the asset under the market value price, but the challenging thing in this case is settlement period of 30 days. So when you're a regulated licensed financial institution, going through all this process in 30 days and mortgaging the asset and paying out the money is exceptionally hard. So this is, let's say, one of the niches how we do. So with projects like these, we have already financed in auctions quite large buildings. Like I'm talking about like 10,000, 12,000 square meter buildings. And every time we have done everything on time. And cases like these very complicated cases, they build reputation. And with this reputation, other people come. So it's all based, let's say, on trust and reputation.
On the sense of investors. So how did you get your first, let's say, 10 or 100 investors? What was the strategy?
I think, again, you pick up the phone and call, or we've done, of course, some marketing, but in general, investors, as we already discussed before, getting investors isn't hard. If you have a good deal, if you have a good investment opportunity, people will come and invest. It's not a rocket science. Well, let's say in last summer we have done around 11 million euros worth of deals. So we funded all of them in matter of day or two. Yeah.
And you have, I can imagine you have like an email list of investors, right? And existing investors, and then you just email them the offer or send them a call?
Yes. So basically, we are an investment platform. You have an account, you have a wallet, you pass the KYC, you top up the account, you get an email, you have all the information right in front of you, you read it, you make a decision, do you want to invest or not? So lately we have just been having a large surplus of investors' demand. So because of it, all the projects get funded very, very fast. So all our focus in general since we started has always been getting high quality deals. That's it. We focus on subprime.
How many deals do you look at to choose one? Like, how many do you kind of go through, screen to choose one?
Let's say a typical month for us is 30 applications. So between 25 and 30 applications per month, and out of those we choose 2 that we wish to proceed.
Okay. And
Yeah.
so these real
let's
estate
say
companies
the
apply
typical.
to you.
Yeah, I mean they call, they write emails. So we choose typically 1 or 2. So the typical size of the deal lately has been ranging between 1.5 and 5 million euros per deal.
Okay. Yeah. Okay. Interesting. In terms of business, so do you see other opportunities for players in this kind of market, which something similar to what you're doing? Do you see like this market being like vastly huge opportunities for multiple players, or how do you see this landscape?
I compete against everyone, and everyone competes against me. Finance and lending is one of the largest industries there is, in no matter which market you go, you will find banks. You will have alternative creditors. This market is huge, but in general, the business lending, and especially small, medium-sized businesses, it's very complicated. It's inefficient. Let's say the traditional players, let's say as banks, they are slow. So they work for large developers. The banking solutions typically work for projects that are very long term. You go from ground up. You need permits. You need construction and everything. It's a matter of multiple years. In these sort of deals, speed of bank is enough. If you look at the type of deals that we do, so these are typically purchase financing, renovation financing. So in mainly all of the cases, the building is already standing. So the building is not being developed from ground up. So speed is critical here. So let's say the main alternatives that our clients have is one, private creditors. Problem with them is the size of financing that they can provide. And, it's not stable, it's not secure. Sometimes the private investors have money, sometimes they don't. But there's no issue for developers borrowing up to 1 million. If they go over this amount, if we're talking about 3-5 million euros, it becomes complicated. So other alternative than us, then you can go to alternative creditors, private debt funds, etc. But these solutions aren't cheap. And in a lot of cases, there's no deal there's not a lot of business to be done. So the way how we position ourselves and how we go around any market we operate, our message to real estate developers is this: we are quicker than the bank, but we are cheaper than alternative lenders.
So that's pretty short, concise, and you get the point across. Gustas, if you would go now back to a younger Gustas who just right now started the company InRento, what would you say to Gustas, advice-wise, so that he would scale the business 2 times faster than you did to this point, which is 1.2 million in revenue last year?
I think that this business shouldn't be done quick. Like this is not a business that you want to go in 10x per year. This is a business of risk. If you go quick or too quick, it means you may be sacrificing the risk element. What we've done up to this point, we haven't increased the number of deals. So let's say the number of deals that we are doing now and we did 2 years ago, it has been smaller, but the size of deal has been larger. This way we are able to maintain the portfolio size. So I don't think that this is an important element to grow 2 times faster. It's like, let's say, I see that this business, it's fine if you double every year. This year is already 5th year when we double. It's fine. Our objective is not to stop growing slower next year. But if we can maintain double and double and double and grow from profit and open new markets, that's fine with me. In terms of what advice in general I would give is not raise equity capital. So basically don't give up the shares, because it's going to be a long journey. All financial institutions that are based on risk, so and risk management, so talking about investments, lending, they're built in a matter of decades, not years.
Interesting. Did you kind of raise money with this company?
Yeah, I raised a little bit. So, and now looking back, I think like, yeah, maybe the first years I would have gone slower, but it would have, it would not have dramatically impacted us.
Interesting. Maybe could you give me some advice on your story? Because right now I have an existing company that does well, and then I'm building a software company that is just starting out. We're increasing monthly recurring revenue by 10 to 80% per month, and I have this situation where I'm spending more money and not making enough, and I'm thinking, hey, I could do it quicker, faster, with some VC or investor capital to basically hire no product people, like programmers. So what was your experience with that? Like what kind of maybe would you tell or decide or look at this kind of situation from your perspective when you have raised some money, but now you kind of retrospectively think, hey, maybe I didn't need it actually,
Yeah, so I mean, if you have two businesses, why can't you do it as one? I mean, this again comes down to me. For me, let's say as a person, a big value in life is mastery. So basically, there's a lot of people who, let's say, they build, uh, let's say, what you say, a business, then a software business, and so on and so forth. But basically, the way how I operate is that if I would do, I in your situation, I would find it very hard, to manage these two very different businesses, because I don't know what is your business, like the one that you told, but going from a non-software business to software business, I think it's tough, because focus is key. Focusing is key in personal life and in business. So, but if you don't need the money, why raise it? If you need the money but you're confident, you can always borrow. It's all depends on the question of your confidence.
That's a good thought or experience.
That's the thing that I think that what is the difference between the Americans and the Europeans is that like Europeans like if you were to raise capital, like what you just said, you only show an example of a VC, or like I don't know, like angel investment, but you presented me these cases only because you're risk averse. Why I'm saying this? Like this is the impression that I got by your comment, is that you want equity investment, so you don't bear the risk. If you truly believe this is a great thing and you're very confident, why not borrow money against it? If you have a business, it's profitable business, I assume. Like my judgment is that I assume that you have personal assets. You can go mortgage your house, your apartment. There's always sources. Like that's, I think, that this element that has taught me working in this industry is that because essentially what we do, yes, we facilitate finance, but it's backed by a security, so it's a mortgage. So let's say our investors' interest and risk is properly hedged. But the guys that we are working with, they truly believe what they're going to do, and they are willing to risk it to get the capital. And I think that let's say, if I was speaking to you and you were American and you would have not asked me this question, you already had the funds. If you were confident, you would have just borrowed. So so I think that the question is whether, which business do you believe in more? If you believe the software is a better business, sell your current business, sell it, have the money invested in software. If you're sure that it's gonna be a major success, you can just take this money, raise this money, and just spend it all. Like, don't dilute your shares. After you sold your business.
Mm-hmm. Interesting. I love that thought
like
experience.
this is my everyday job. Like when people ask me like, so how does your work, what it revolves around? So let's see, last year I've been moving more and more away from the operational side of the business, and I'm mainly involved in deal selection. So, I always ask my question when assessing, let's say, any investment opportunity or any borrowing application is, what do I assume I know, but I don't know? So let's say, what makes this case to have some risks? So it's always a mental exercise of understanding what kind of bias you may have that imposes your judgment that but in reality you are exposed to your judgment bias. So it's I'm in mental gym like every day. Just
I like that. What are some things about focus? So you said a key thing for, I think, entrepreneurs in general is like focus. But what on deeper on this topic? How do you maintain focus? Maybe have some mental thoughts about it? Like what helps you specifically to have more focus?
getting things done. As funny as it sounds, and straightforward, but the quicker you get all the things done and you don't have to think about them, the more you have time to think about things that are important and you can clarify. Because a lot of times I see people, the key of solution of anything, let's say of task performance, is understanding the problem. So let's say if someone has a task, but it's interpreted wrong, your focus will be in understanding the solution for that specific problem that was articulated, but not understanding the problem itself. So for me, I like to have these clear blocks. So basically of time where I could think, where I could analyze things. But if you don't have things done and when you're thinking about something, but then thinking that something was not done at the same time, it loses your focus. But, our business is about discipline. It's just doing same thing over and over again. There's no room for mistake. And our objective, let's say, when we think about processes and we think about our business, is we don't have this, let's say we double every year, not because it's our goal, but it's a result of our actions. Meaning, in our business, we just go in every day and we want to do things that what we did yesterday, do a little bit better. So it comes down to all the resources. It all comes down to, let's say, our company values. So let's say our clients should not ask the same thing over and over again. They must have this information available to them. What it means like this: if we get a customer support query for same thing twice, it means we're doing something wrong with the product. So we go back, analyze, and see how can we solve this question so it doesn't arise again. Doing this way, we don't have to. We can focus more on the product and understanding the root cause, the root problem that the clients are facing, but not working on a problem that you can approach this problem that we get a lot of support emails on this particular problem, but this isn't the problem. The problem is that you don't articulate or you don't show clients everything clearly on the product side, so they don't have to write you. Do you follow me where I'm going with this?
Of course, it's like looking at finding the root cause of the symptom, not thinking about hey, we have a symptom, let's solve this symptom. Like what is causing the symptom? And I think for me specifically, where I have the service business, I was also thinking in my case, we have many times some symptoms where the issue is communication with customers. So they cannot get a hold of the marketing manager they're working with. So that's one of the issues. And the root cause, I guess it also comes down to maybe systems, processes, and people, and that's the root cause, right? In that kind of sense. No. About project management, it was actually interesting. you have this cool thing you also told me, that is that there's like no late projects. And for project management, like how much of that thing is actually involved for you? Because I don't believe that you're actually, or you're hiring somebody that does the renovation or does the building, or how does that work? Or what kind of
We
project
don't
management
own
you do?
we don't own any assets.
Okay.
We don't own any property. We don't buy any property. We only facilitate loans. Our job is to do an assessment of financial application, structure the deal, take care of all the legal aspects, and we facilitate finance. We don't own. It's not on our books. It's a real estate developer who does it. Same way if he goes to a bank.
Yeah.
So if he goes to a bank, he borrows, he takes on a mortgage. He doesn't transfer the property to a bank. It works exactly the same.
But for you, what is kind of key for the project management side? Or is there something you need to kind of look at daily or weekly or check?
Yeah, absolutely. We monitor all projects all the time. But, it all comes down to a deal structure. If you structure a deal at the right risk price, meaning that, let's say, in general in life, I don't think that the risk itself is a bad word. Like for Europeans, like a lot of Europeans, when they hear a word risk, it sounds like like a nightmare. Reality is that there's this thing called risk reward. I think that if for your risk you're compensated adequately, it's fine to undertake some risk. So it all comes down, let's say, to deal structuring. And why do I say this? If we structure a deal in a way that the collateral value is much higher than the loan we anticipate, the loan that we issue, or we finance undervalued assets, nobody wants to lose them. Like you miss our payment fee a time, you don't settle, you don't pay late interest penalties, we are going to repossess the asset. Simple games of the rule. You either pay on time or we repossess your asset. Very straightforward. So basically, if at the initial point of signing the deal, we have put in measurements that protect investors' interest, and the developer will never want to lose this asset. So, maybe the market is low. Maybe he cannot sell the asset. Maybe there's something wrong. There's 1,000 potential issues that could happen. You can always, let's say, refinance. You can refinance with financial institution. You can refinance with private capital. You can look for solution. But all the profit of the project is in the asset. So why would you want to give all the profit away? You don't. So that's how we maintain the portfolio value. At the entry point, we structure the deal in a way that for a developer, it would be he would incur a high loss if he would default on our payments.
Got it. That's cool. Saying having good contracts, good legal system to protect yourself in the business and in the investors in your side. I see.
But it's not legal contracts. But it's not about legal contracts. I mean, all the financial institutions, they more or less will work on simple loan agreement. It's the way how you perceive risk. It's not universal. The contract doesn't decide what is the adequate risk. Risk scoring models do. The risk scoring models are not, let's say, automatic, that you go buy online, there's some service or some consultant, he writes your risk model. No. Each financial institution, they have their own risk appetite, and based on their risk appetite, they structure these models. And this is what makes the difference between the financial institutions is how well do they manage risk. And yes, contracts are important, but more or less anyone can get a contract. You can hire same law firm, they will draft you more or less the same agreement. But if you don't know what you're doing, if you don't understand risk, you will just kill yourself with this particular, with the same contract. We can use the same contract, but apply different rules of how we interpret risk and how do we assess deals. So I wouldn't say this is, let's say, agreements, documents, etc. No, it's the process.
So it's choosing what to do. Of course, I understand that. I'm not just I'm not playing down on that. I see that recently one of your seventh market is right now Latvia, actually. So I'm from Riga.
Yes.
You're from Lithuania. How do you look at the real estate market in Latvia? How do you see it? Because many people who watch this show actually are Latvians. So how do you see the Latvian market?
Yeah, so I think Latvia is too macro to discuss. I want to focus only on Riga because this is where all our focus is. We aren't interested in other particular places. We're not saying no, but our whole focus is to Riga. Let's say what makes Riga very unique and very different compared to Vilnius is that, like, Latvians don't understand it yet, but they will soon, is that in Riga you can still buy buildings. You can still go buy an old town in neighboring districts, old building, and you buy out all of our apartments. So if you can do this, and it means you have full control of the asset. You can renovate, you can decide what kind of apartments you want to sell, you can launch a hotel, you can do whatever you want. Let's say in Vilnius, I wish you best of luck to find an open market deal where you can acquire a whole building. It's impossible. Like, the buildings are fragmented, there's always multiple owners, and for you to acquire the whole building is very painful. The only way you can acquire a building is ex-commercial spaces, but the difference between Latvia and Lithuania is price. So let's say in Vilnius if you buy a bigger asset, it doesn't mean it's going to be cheaper. So it's not that, oh, I pay more, then I get cheaper square meters. No, in Vilnius, it doesn't matter. There's buyers for everyone. The market is super liquid. In Riga, you still have this old phenomenon that we had in Vilnius, is that the bigger asset you buy, the cheaper price per square meter is. So let's say, yeah, it's not convenient for retail, but for real estate developers and investors, this is the best thing that can happen. Because how real estate works. So many people, assume that in real estate you make money when you sell the asset. Yes, you do, but the reality is that all the money is made at the entry point when you purchase it. It all comes down to my previous point, which I said, like, nobody wants to lose the asset because all their profit is in there. You buy the asset for undervalued price. You can, let's say, invest very little money and multiply its value. Let's say getting a development permit. Let's say substitute the usage of the asset or build an extension, build a few more floors. Another action that you can do, you can always leverage on the asset. So in real estate, money is made at the entry point. It's not made at the final point. So what we see in Riga is that there's a lot of deals like this to be done.
Okay.
And the markets and the prices, they are very cheap. Like, if you compare it to Lithuania or Poland. So when you buy the bigger asset and the price is cheap, you can keep this asset, let's say, for cash flow. And in Riga, it's still possible to do double-digit returns on these assets from rent, which is unheard in Vilnius.
Interesting to say that. I think I recently had some guy who was like, yeah, the real estate market here is not so good, and etc. Because they're maybe in a bubble, they just see their own.
No, it's not about that. It's about the way how you perceive the asset in terms of which kind of verticals you do. We specialize on buildings. We specialize on renovation financing, cash flow financing, cash flow assets financing. So in this particular case, there is business. Let's say in Poland, for some reason, most of Polish developers, they work from ground up. So they buy a land plot, they work on permits, they develop it, and they sell it. Whereas in Vilnius, Lithuania, there's a lot of business to be done in just conversion of assets because there's no land. There's no land to acquire in Vilnius, basically. So all buildings are being utilized. to a new life, and the cities are being changed. That's why I also say that we are transforming cities one project at a time, because we take, like, even this building in Riga, it's now not being used. After a year, you can go and check in yourself, do a tour. I can organize it for you. Meet the real estate developer, have a chat.
In a sense of, hey, I'm a I'm a private individual and I would like to invest in real estate. What kind of, do you do it yourself, by the way? And is there anything you think is an undervalued asset class where you should be focusing, and it could be the best thing you do as a private investor?
Yeah, I think the most undervalued asset in the world is time. A lot of people, this is the most undervalued time asset class in the world. Like, think of time. Why I'm saying this? You have a lot of retail investors. They think real estate is amazing asset class. I will go buy an apartment, rent it, or I will do some renovation. Yeah, good luck. Calculate how much your time is worth, and just check how much time you're spending. So, okay, it's cool if you're going to get, let's say, rental yield 7-8%, which is, it's higher than market average if you did your research. But calculate the hours that you spent, calculate how much from other activities you get from this 1 hour, and you will see that you're not making any profit. Real estate as an asset class is very hard. I think that the thing is that what most people get wrong about real estate is that the time intensity of which it requires. Like, if I can give you a very simple example. When you have large real estate development firms, look at how many projects they are developing at the same time. It's typically not much. Like, choose any real estate company, let's say in Latvia, go to their website and see how many projects do they have at the current moment. Do you know? And the reason is very simple in real estate. If you do a small project or you do a large project, it requires same amount of time. So you focus on the large ones. The small ones, like, if you want to get started, like, yes, you will make some money as, let's say, a private investor, but when you go and value your time, you will lose money. If your end goal is to become a real estate developer, yeah, that's fine, go and do it. But in general, I think that in modern times, generally with the development of financial market inclusions for Baltic citizens. So, like, if we were to talk about 5 years, yes, we could talk, there's very few stock trading platforms where we can invest. But let's say, being from Latvia, then I would say yes. Now you have tens to choose from. You can choose by anything. You can choose by the country, by the color, you name it. So I think there's, even on capital markets, there's much better alternatives than just buying real estate. So that's my thought. But maybe I'm too critical. But when I look at a lot of people who decide to do this as a hobby, like, yeah, if you find it very fun and you don't value your time, go and do it. But in general, just measure how much time everything requires, and just think second time, do you really want to do this?
Yeah, this is interesting thought experience, right? You buy an apartment, it costs maybe, let's say, 100,000. You can get rent, let's say, 700 euros, but then you spend monthly 10 to 20 hours per month on kind of maintaining, managing, doing something. Yeah, that's interesting, clever.
Just and not even about maintaining. Like, I love this whole concept about being asset light. So being even if you don't think about it from this, how many hours you spend, like, literally dealing with something, dealing with the tenant, paying utilities, or like doing practical stuff, it takes up room in your head.
Yeah, right. Like mental.
Yeah. We're again talking about time. So people, what I observe a lot, people, they don't value their time as they should.
You're, by the way, married? We have kids? No kids?
No.
Yeah, that also takes a lot of mental capacity, the wives and the kids and etc. So last two things, one, the more funny thing, or more cool, adventure thing. If I go to Vilnius to you and you need to take me on an adventure, and it cannot be your office, so what would we do in Vilnius?
related to InRento?
No. Just like I'm your acquaintance, then I would be your friend. So I go to you from Riga to Vilnius. So what kind of cool activities would you take me to do on Vilnius?
To be very frank, like last few years, I've been so focused on Poland and our international expansion
Okay.
that I haven't spent too much time here. Like, there's a lot of things to do here, but I've just been focusing on other places. So, yeah, Old Town. We can go to Old Town. We can go for a walk. Like,
actually, in Vilnius,
we can have a dinner. Like,
in Vilnius, you have this cool street, which was a new street about like restaurants and bars. I have been there. That was a cool street. There's like one specific street, I think. You for sure know that. And the last thing, what would be your advice for business owners in Baltics that you would tell them, that would encourage them to have a more kind of international look at the opportunities, to not just stay in one country, but to export, to expand, to get more customers from everywhere, right? What would be your advice based on your own experience? And
do or do not. There is no try. So there's no try. You either do it, or that's it. So it's a great piece. Like, if you decide to go international, go and do it. That's it. Like, these markets are too small. Like, it's fine to have, to pay salaries, to create some life, but in general, you're not going to achieve big things. So that's why we've been obsessed with going international. So from deal side, this year is quite nice because we will finish the year with more deals coming from abroad in Lithuania. So that's a nice milestone. In terms of investors, we've always had more international investors than locals. So let's say, we have more than 50% international investors, and our dominating market is Germany. So,
let's go. Why am I super passionate what you're saying? Because we also do this content like we're doing right now, also in Latvian, and also we're always pushing or talking about like exporting, being more bold. So I really appreciate that. And it's very interesting that you have more investors from not Lithuania, very interesting. But how many are there? How many investors?
Around 4,000.
4,000.
Around 4,000.
And what's the average kind of investment that they do?
So average portfolio is 15,000 euros.
15. Okay. Interesting.
Yeah.
Cool. So thank you for your time. Thank you for sharing. And my wish to you is to grow, keep doing what you're doing, which is all obviously working, double every year. No need for the 10x, but if it happens, also, I wish you that, no problem. So, and as we said, always, we have this stay sharp, make a move at the end. So stay sharp and make a move.
I didn't get it.
No, we have that's like our saying of our content. It's like, stay sharp and make a move. We always finish on that kind of sentence.
All right, cool then. Thank you.
It's similar how you said that, like Yoda, just do it, like just do it. Like, don't think, just do it.
Yeah.
There's no thinking, just doing. So thank you for having us, and hope to see you in Vilnius. So get ready. When I'm coming, I'll let you know.
We're going for a walk and then a dinner.
That's the plan. Давай, Gustas. Thank you. Давай. See you next time.
Yeah.
Ciao.